Welcome back to Pump the Brakes. This is the April 14th, 2024 edition, where we're going to talk about market volatility, talk about economics, and just the state of the overall past returns for the first quarter and what may be affecting the movement of the market. So if you're joining for the first time, welcome. If you're back again, because for some reason you're addicted, welcome. But most importantly, before I go any further, please like and subscribe to the podcast. I really, really appreciate it. So there's a like button. If you want to hear any new streaming that comes out, there's a little bell somewhere on there. There's a bell. Click on that and you'll get a response to your email or your cell phone, what have you. It'll let you know when the next show is. So today is April 14th. It'll be the April 14th edition of the show. Let's jump into it. Market volatility. What is going on inside the marketplace? I know last week we've had days where people look at numbers and they see let's say the Dow Jones is down 500, maybe the S&P 500 index is down 100 points. So basically, sometimes you're seeing the market down 1%. And maybe you'll see it, you saw it maybe the next day. So we've had a lot of volatility. So I said, let me get on. I always like to quell fears. I generally don't come on when the market is up 1%, unless there is some real good economic information or breaking news of some sorts. But always let you know why there is volatility. And we always go back to the same thing right now. And I like to say for average investors, new investors, it's inflation. Even if you're an experienced investor, inflation, inflation, inflation. So over the past few days, past few weeks, maybe the past year, we've had a lot of speculation inside the market. So the speculation has gone to, how do we slow down inflation? Okay, so we've raised, we meaning the Federal Reserve has raised interest rates. And if you then raise interest rates, it slows down the economy. The next step is, okay, well, we've slowed it down in different pockets, meaning we've gotten inflation down, not out, not down and out, but basically slowing down at a rapid pace. So where we were maybe at 10% about a year ago, we see it increasing on an annualized basis around 3.5%, I should say, not 3. So right now, this major speculation is, okay, so if we've gotten it down, we again, the Federal Reserve, have gotten interest rates down, gotten inflation down, the next step should be on the books based on Economics 101 would be, okay, at some point, maybe we need to then lower interest rates to start seeing more growth. Well, there's where you have the pause, kind of like the show, Pump the Brakes. The major pause is that the economy is still growing strong. Unlike other economies where you may have heard me talking about interest rates and what I see or had foreseen in a possible, not just inflation, but possible recession. Well, the recession did hit other major countries, such as Germany, such as the Great Britain. So they've definitely had gone into recessions. Unfortunately, or fortunately, we have not here in the United States. So inflation is basically the elephant inside the room, where we're looking at the higher petroleum prices. So last week, we had the CPI, which is the Consumer Price Index. That's the benchmark for what inflation looks like month to month, year to year. And it shows all throughout the economy. That's brought to you by, not an advertisement, but just so that you know. And I'll try and put the link in there this time, so if you want to take a look at the report. But basically, it's brought to you by the Bureau of Labor Statistics, generated by the government. So higher petroleum prices. I had a general idea that when the report was to come out, Oh, I said that's got to be a little bit higher. It can't be lower because I'm noticing that petroleum prices are going up. If you drive a lot, you'll notice it yourself. You'll see it if you're paying attention in the marketplace and you just happen to be looking at either uh, Brent crude prices per barrel, or if you're looking at Western sweet crude per barrel, you've noticed that we've had a little bit of volatility in those prices and the prices going up. Definitely what causes that, I'll touch on in just a moment, but that is why I expect before the report came out, unless for some reason there were drastic drops in so many other places, I did expect for that report to be a little bit higher. As I said, I'll touch on the report in just a moment. So we're seeing strength inside the economy, fuel prices up, also cuts in production. Hence, I'm kind of going into the report a little bit. When I say production, not the U.S. Production of petroleum, because we are producing, unlike you may hear, this is always a political thing, and I'm not going to get into politics. My mom told me many years ago not to talk politics with friends or foes for that fact. So all I can tell you is that you may hear rival parties talking about, oh, well, you're not producing enough. The United States is the number one producer of petroleum throughout the world. However, just remember, the price of petroleum is not based on just the United States producing. There are many other countries that produce oil, and the biggest is OPEC, which is the conglomerate of various countries. So you put all that together and you come up with a price. And you also have cuts in production. So if Saudi Arabia says they're going to cut production, of Russia, who's not part of OPEC, but they align themselves with certain countries such as Saudi Arabia. And if they say they're going to cut production, which cutting production means to get the price up, that means that you'll see that reflected in, right down to the pump, right down into the cost of transportation, so on and so forth. Because petroleum is basically ingrained all throughout the economy. Whether you have an EV or not, petroleum is still a big thing inside the economy. So that is a point that I wanted to touch on. You also have other things that are creating market volatility, such as global tensions all throughout the world, because we are not a monolith. Yeah, if you look at the Dow Jones, the S&P 500, the Nasdaq, the Russell 2000. Yeah, there's a lot of US-based companies, but US-based companies do business all throughout the world, and there are foreign companies also inside some of these indices. So with that being said, I was talking to a friend, great example. My friend Ricky Wilson, he's a pilot with United. He says most people say, hey, they have no idea of what's going on in transportation. How many flights have been canceled? And in his case, he's looking at the Ukraine war and also what's going on in the Middle East between Israel and what's taking place in Palestine. He says, we have to cancel flights. And in canceling flights, that means that there are less flights going, overseas. And sometimes we have to go into different or create different routes to get above and past certain areas so that we are not being encumbered by any possibility of war. So if you look at that's a very interesting thing when you say, how do these global tensions affect the earnings of corporations and the pricing of transportation? There's your great example right there. Thank you, Ricky, for talking to me about that a few days ago. We also have just ended the first quarter. So we have corporate earnings coming out, basically letting investors know how well companies have done as far as profitability. Other ancillary economic reports I'll touch on towards the end, especially some of the information data that's coming out next week. But I'll touch on two other points in just a moment. And then just speculation of interest rates. I kind of touched on that, so I won't belabor that any further. Again, hopefully you have liked and subscribed to the channel. And just to pause for the causes, I'm going into the next set of data. Let's look at point two. Point two, what's going on as far as economic news? I touched on the CPI, which is the major inflationary index, also or better known as the consumer price index. That report came out on April 10th, so just a few days ago. It rose 0.4%, and it's at 3.5% on an annualized basis. Now, the Federal Reserve likes to see inflation somewhere around 2%. So if we're about 1.5 over that, they're still looking at that amongst other measures, but still saying inflation is still encumbering the economy. Not saying that they will raise interest rates to try and stave off a little more of this inflation. I would be surprised just based on some of the thoughts from some of the Federal Reserve governors and the Federal Reserve chairman has not said that, but things can change. And also inside the bond market can raise interest rates any single day. You don't have to wait for the Federal Reserve. The U.S. Treasury market can look at data and just say, hey, let's let's sell off the price of bonds, which raises interest rates. And that can happen on any given day, any given moment based on economic data. So that report came out, as I mentioned, at 3.5%. The expectation was that there was a rise of 0.3%, minuscule, so to speak, with the rate being around 3.4. Not much of a variation, but still the expectation and what the Federal Reserve is looking for, are two different things. So let's just look at some key points. What did I pull out of that report? And again, that you can look at. I'll try and put that link inside the body of this show. You can take a look at the report yourself. I looked at gasoline of all types, up 1.7%, year to date, up 1.3%. Shelter, we always talk about how the cost, especially if you're in New York City. I saw a price and crazy as you use this as a barometer. It says, the price of a one-bedroom apartment is around $4,000. Ridiculous. I say you might as well, if you can afford it, most importantly, buy a house. Although interest rates are crazy, at some point rates will go down, but not telling you that you should. I just look at those prices, $4,000. It's crazy, but people do it. And that's actually down a little bit. That was a report that came out a few days ago. I heard that in passing and just laughed to myself. But as everybody knows, housing, shelter, up 0.4% for the month of March, and year to date up 5.7%. So above inflation. And there was a guy who we eventually nearly ran, I think, for mayor, and I forget his term. Basically, it was kind of like, inflation is just crazy. I can't think of the term right now. I can't belabor it just for time's sake, but touching on trying to find a place, affordable housing, and that's something that everybody talks about. If we look at another key point, transportation up 1.5%, year to date up 10.7%. Vehicle insurance up 2.6%, eggs up 4.6%. We're not around that 10-20% for the rising price of eggs. And the reason for the price of eggs, again, is the avian flu with birds. I'm sure that corporate America is not helping in any way. I know the government has sued some egg manufacturers earlier in the year, but I know that the avian flu is something that I've talked about previously. And anytime that does spread, I know it spread recently to a major manufacturer, so they have to cull, a lot of birds. And if you don't know what cull means, kill a lot of birds, and that means less supply, higher cost. Leisure was up also 6%. If we look by region, and usually I've never touched on region, if you look at regions where I look at versus the norm of inflation of about 3.5%, Hawaii, their CPI at 4.8. They import a lot. Dallas, Texas at 4.9. and Los Angeles at 4%. So you definitely get to see, get a feel for what's going on with regards to inflation. If you really want to see how it's, impacting your bottom line, you can take a look at the report. Next, the next very important piece of economic news came out on April the 6th, which was the jobs report. And after, let's say, 11 rate hikes, basically to weaken the economy, that's interest rate hikes. The job market is still resilient in the United States. So the March job report saw 303,000 additions. Expectation was only 200,000. So you see that it is job market, the economy, and I'm not honing in on what type of jobs, so to speak. I have touched on a little bit. I'll throw out there no numbers, but just where I saw increases. But it is resilient and possibly re-accelerating, so to speak. So where I saw strength inside the market, key pointers: healthcare, construction, pardon me, hospitality, and government jobs. Those were some of the key areas. So this may keep, along with the CPI report that I touched on, it may keep the Federal Reserve on the sidelines from possibly raising interest rates. The speculation had been that, sometime in September, October, analysts are thinking that's when the Federal Reserve will raise rates. But if you keep seeing strength inside the economy, lower rates, pardon me. But if you keep seeing strength inside the economy, they will not lower rates, because you don't want to continue to see inflation growing. You're trying to cut it. So that's where we're looking. And most importantly, the unemployment rate fell to 3.8% in the month of March from 3.9% in the previous month. So that is the economic data for you. Let's just look at the marketplaces as we get close to wrapping up this show. You're getting your statements right now, so you're in the situation where if you're an investor, whether it be your 401k, your IRAs, your non-retirement accounts, you're getting your mandated quarterly reports. So if we take a look, and this is brought to you by Market Watch, as well as Morgan Stanley Capital International Markets. Let's take a look at key indices and how they did for the first quarter. So that would have been ending March 29th. And then juxtaposed to that, we'll take a look at where the markets closed on Friday. That would have been it was the 13th. So that would have been the 12th, pardon me. April the 12th. So the Dow Jones was up for the quarter, 5.62. And you can see where we've had some sell-off inside the markets based on inflationary fears and some of the other data that I touched on. The Dow Jones as of Friday was up only 0.78%. The S&P 500 closed for the quarter up 10.16. And on Friday, the 11th was up, Friday the 12th was up 7.4%. NASDAQ for the quarter ended up 9%. For Friday, it closed up 7.75%. So you're seeing that variation from where the close was on April 29th versus March 29th versus April the 12th. The NASDAQ was up 9%. I just touched on that. I said up 7.3%. The Russell 2000, which encompasses all small size companies, was up 4.8%. It is down as of Friday, 1.18%. The S&P Mid Cap 400 for the quarter closed up 9.5%. Closed Friday up 4.25%. Juxtapose, we take a look at the Russell Mid Cap up 8%. For the quarter, and it is, as of Friday, up 3.6%. Dow Global up 7.4% as of Friday. That was for the quarter. As of Friday, up 4.5%. The Morgan Stanley EFA, which is your Europe, Asia, Far East. That was up 5% for the quarter and closed on Friday up 2.4. Emerging markets, basically emerging markets are economies that are experiencing considerable growth. In the global markets, examples, South Africa, Taiwan, India, Mexico, Brazil, China, as just a few. The Morgan Stanley emerging markets was up 1.9 for the quarter and is kind of resilient, up 1.75 as of Friday. So those are the markets. I touched on oil, and just to give you an idea, I'm not doing gasoline prices, but just oil prices per barrel. To give you an idea, Western crude is basically the benchmark that we use in the United States. That's petroleum that's throughout the United States that is created. And then internationally, in the European, Europe uses the Brent crude, and that's Europe, Asia, and the Middle East that uses that as an indicator. If we take a look at Western crude, for the month, it's up 5.5%. For 3 months, up 17.4. Year to date, up 19.8. So we have seen prices increase because of cuts inside the production, as well as because you're seeing stronger economy. Brent crude, and actually, pardon me, if I just go backwards, if we look for the past 52 weeks, the low on a barrel of oil is $63.50 versus a high of about 95. We closed on Friday at $85.45 a barrel. Brent crude versus Western crude is a difference of nearly about $5. Brent crude closed on Friday at about $90. The high low for 52 weeks is 71 and a quarter versus 95, just about $96 a barrel. So it gives you just a little peek into what is creating the inflation inside or one of the things that's creating inflation inside the economy, and it definitely is oil. You can pump as much as you want. When you look at those two indicators, Western crude, Brent crude, those are prices that are created for all throughout the world. So as I said, the United States can be the greatest producer, but there is a price that is utilized. It's called a spot price, and you could produce all that you want. There's a spot price globally, and it then gives you an indication as to what the price will be for everyone. So, I like to say we're not Martians on this place. That's a lot of the oil that we produce, just as well as natural gas, is shipped all throughout the world. That said about oil, corporate earnings, as I mentioned, is something else that is also could affect the movements inside the market. We are looking at first quarter earnings that are coming in, just started coming in, and basically it illustrates the strength of sales, profits, and companies give their guidance as to how earnings will be for the next quarter or for the year. That's all I have on corporate earnings. What to look at in corporate earnings, really, banks, tech stocks, conglomerates. What else? Stocks, we look at stocks, what are they going to be sensitive to? Interest rates. So less consumer spending. Higher interest rates basically creates less consumer spending, which can affect earnings. Also can be prohibitive for companies borrowing money because they don't want to borrow, just like you, if you're maybe buying a home or refinancing a home or refinancing any loan, you would not want to do it at such high interest rates. You may not want to take out a loan at such a high interest rate. So, that can kill growth of a company when they're not borrowing money at that point in time. So those are some things that you look at with regards to earnings. Companies also look at inflation. What inflation affects earnings of a corporation? Higher cost of inputs, expenses. Human capital. We all want higher salaries, but that does affect the bottom line of a company. And also fringe benefits such as healthcare, higher costs there too. So that is actually the end of my topic on corporate earnings. All right, so let's close. And before we do, again, I want you to like, share, and subscribe to this show, Pump the Brakes. I don't even know if I introduced myself at the beginning, but hopefully if you do not know me, I will say my name now. My name is Andre Beckles. I'm an independent financial consultant with Harare Wealth Management. Pardon me, because I think just for rolling into the show, I may not have said that at the beginning, but definitely say that at the close. So what do we look at the close? If you listen to this stream, you will notice that April 15th, last day for IRA contributions. What is it, 6,500 to 7,500? So 6,500 if you're under 50, and 7,500 if you're 50 years old and above, and you have earned income. And we just look going forward for 2024, your all new contributions, because you can still, what I was speaking about earlier was for prior year contributions, you can do up until April 15th. Most institutions will still take that money. But going forward, IRA contributions will be 7,500 for anyone under 50 and $8,000 for anybody that is 50 and above. Let's see. Economic news that will be pending for the forthcoming week. Retail sales. So, how jolly people were with their money, their discretionary money, and spending it. That report will be out next week. Housing starts, existing home sales, Beige Book. I used to have a joke about that. I can't go into it, but Beige Book basically gives you an idea of the strength and weaknesses in different pockets of the economy. It's called the Beige Book. That will also be out next week. So with that being said, today is April 14th. I hope everybody is doing well, you, your family, your loved ones. I want to thank you for sitting in and listening to this stream. That is called Pump the Brakes. My name is Andre Beckles. I'm an independent financial consultant with Harare Wealth Management, and this has been another edition of Pump the Brakes. Until I speak to you again, peace be with you. And as I said, I hope all is well. Take care.